Hey everyone, it's Kyle Winn here with Sage Realty, and if you keep up with my videos, you may have seen that a month or so ago, I released a video about the cost of living in Menifee, California. Now I received some great feedback from that video, and people have asked me to make some similar videos for other nearby cities. So today I'm going to talk about how much it costs to own a home in Lake Elsinore, California. Over the past couple years, we've seen home values jump up quite a bit, and now with all this talk about inflation, people are becoming much more aware of their budget and their cost of living. So with all this appreciation in home values in recent years, the cost of owning a home has definitely increased. But if you also keep an eye on what it costs to rent a home, you'll notice that that has also increased pretty dramatically. And in fact, a mortgage today will still tend to cost you less than the rent would for the same house. But that's not the point of this video, so if you'd like to run those numbers, just shoot me a message, maybe an email, and we can check that out together. Anyways, back to how much it costs to own a home in Lake Elsinore. As I'm recording this video, we're here in December of 2021, and I'm going to tell you how much it costs to own a home in Lake Elsinore based on sales that have occurred here in the last few months. So let's go ahead and dive right in. Today we're just going to look at 3-bedroom, 2-bathroom, single-family detached homes. Now these are just regular houses that do not share any walls with the neighbors, so we're not talking about condos or townhomes or even manufactured homes. Now over the last few months, the 3-bedroom, 2-bathroom, single-family detached homes have sold for about $490,000 on average. Now, of course, you need to keep in mind that the price of a home can vary depending on so many things like the age of the home, the condition, the location, and many other factors. So what does it cost to own a home in Lake Elsinore that you buy for $490,000 today? Well, first, let's talk about your mortgage payment. All right, so let's say you've saved up to make a 5% down payment, which means you obtain a conventional mortgage of $465,500. Now, if we assume that your interest rate on that loan is 3.25%, which is actually pretty common for a conventional mortgage at the moment, then your monthly payment will be about $2,025. Now, keep in mind that the type of loan you obtain, your interest rate on that loan, and other variables may depend on your income, your profession, your down payment, credit score, and more. But we're not going to just talk about loan programs today, so if you do want to learn more about loan programs and mortgage payments, I made another video about that, so be sure to check that out here. Now, because in this example you are obtaining a conventional mortgage with less than 20% down, you will have to pay for what's known as private mortgage insurance, or PMI. Now, this mortgage insurance insures the lender in the event that you default on the loan and is generally required on conventional loans when the loan amount is more than 80% of the purchase price of the home. Now, your PMI can also vary greatly depending on things like the value of the home, your down payment, and more. All right, but just for example, let's say it's about $100 a month. Then, of course, you'll have homeowners insurance as well. And one way that some people estimate what your homeowner's insurance premium will be for the year is that they say it'll be about 0.25% of the purchase price of the home. All right, so in the case of this $490,000 home, that will be about $1,225 a year. So for this example, let's also call that $100 a month. Now, we can't forget about your property taxes. This can be a real eye-opener when shopping for a home because it can vary greatly depending on the neighborhood that you're shopping in. Now, if you're shopping in a neighborhood that was built more than 20 or 30 years ago, for example, the property tax rate might be about 1% of the value of the home per year, or for this $490,000 house, let's say it's $5,000 per year, which breaks down to $417 per month. All right, I know these are a lot of numbers, but we're going to summarize this at the end for you guys. Now, on the other hand, if you're looking for a newer home, the property tax rate will probably be close to 2% due to special assessments. So again, for this same $490,000 house, that would be about $9,800 per year or $817 a month. All right, so that's a pretty big difference. So now you can see that the neighborhood that you shop in can greatly affect your monthly housing costs. Now, the last major consideration we're going to talk about today is whether or not the home is in a homeowners association. All right, now there are many neighborhoods in Lake Elsinore that do not have an HOA, so we know for sure that that monthly cost is going to be zero. However, many of the newer master plan communities in Lake Elsinore do have an HOA, and those can vary greatly. But let's just say, for example, we're looking at a house that has HOA dues of $150 per month. So now that we've got all those covered, let's add up the total monthly cost of buying a home for $490,000 with a conventional mortgage with 5% down and a 3.25% interest rate. All right, so as we said, for the mortgage, the principal and interest would be $2,025. And then we talked about your PMI, your private mortgage insurance, for $100. And then another $100 per month for homeowners insurance. And then your property taxes that could range from $417 to $817, as well as HOA dues, which in this example might range from $0 to $150. And those can vary, but therefore, your monthly cost of owning this $490,000 house that you buy in Lake Elsinore today will be between $2,642 and $3,192. All right, now again, this video is just an example, so please keep this in mind, and I guarantee you that your individual scenario will be different than this. But this should at least give you an idea of what it costs to own a house in Lake Elsinore here at the end of 2021. Now, of course, you can reduce your monthly payment a few ways. One of those would be making a larger down payment and selecting the loan program that's right for you. Okay, and with the right loan program and a large enough down payment, you can reduce or eliminate rather your PMI altogether, which minimize your total monthly costs even more. Now, you can also reduce your monthly costs by searching for a home in neighborhoods with lower property tax rates and low or no HOA dues. Okay, now also, once you do buy a house, or even if you already own a house, be sure to talk to your CPA or financial professional so they can help you take advantage of the tax incentives of owning a home, which will save you even more money. All right, well, I hope you found this video helpful, but if you have any questions, go ahead and drop those in the comments below, or give me a call, text, or email anytime, and I will see you in the next video.